G'day folks, welcome back to Pete's Investing. It's April 8, 2024. This is the market analysis for SP 500, the NASDAQ, Japanese Nikkei and the German DAX. Plus we'll go through a trading idea for you. Before we look at the charts, look at the heat map. And what we're looking at here today is looking at the US market, the German DAX, Japanese Nikkei and the US NASDAQ. You can see there on the monthly they're all bullish. On the daily they've all turned bearish, but on the weekly there's a mixed bag there. Two are bearish and one neutral, and the German DAX is still bullish, so a bit of a mixed bag, but all predominantly turning more bearish the way things are going at the moment. So just be careful about going long, and we use that primarily to trade in the direction when these are all aligned. So we'd probably be safer taking short trades on the Japanese Nikkei and the NASDAQ as opposed to these ones at the moment, but it can be done on the daily as well. So first looking at the SP 500 on the daily, as you can see here, it's broken down below this ascending trend line. And on the hourly, likewise, you can see there it's actually broken down, hit our target on this bearish divergence. And if I drew a Fibonacci just to show you where that target was, that was between that low and that high. That's a 38% level. The price came down as far as 61% and bounced from there, but then it fell again pretty sharply before our last video, below the 61%, and made a bit of a retrace to the upside since then. Now you'll notice the CCI is still pretty much fluctuating but dropping still, so that's still a bearish sign. And if I zoom out on the hourly, you can see that it's been in the overbought territory for some time. It made a bit of a pull back towards the 75 level, and it needs to break below the 50 level to be a lot more bearish on the hourly. Likewise on the daily, you can see there it's still pretty much well overbought. Now notice we've also got a bearish divergence on the CCI 150 versus the price, so just be careful about going long. I'd like to see it break above that resistance to be more bullish. At the moment it's favouring more bearish positions. Now in terms of a trading idea, what I've done here is I've drawn this coloured map, and it's basically picturing this CCI 150. It's green when the CCI 150 is above the moving average band, it's white when it's within the band, and it's red when it's below the band. So basically the way you look at this, and this is what we use for the trend indicator, it's currently bearish on the daily, and we take predominantly bearish trades at the moment. So if I was to zoom out or zoom into the hourly chart, for example, get rid of that to make it a bit easier to picture. So you can see there going bearish from that point there. And again, I've got another, when the CCI 150 drops below the moving average band, you would take short positions there, and you probably close it out once it turns white or green. Again, only taking short trades, so take another short position there, close it out when it turns white or green. Another one there, that one would have been, you would have entered just on that large candle there, and you probably would have closed it out down there somewhere, so you would have gained predominantly that candle there as a short positioning, and you would have closed it out there. And some of these you can put basically, let's say for example you entered short there, when the hourly turns pink as well, you could put a stop loss above the recent highs, or what I've got here is a VWAP 50 indicator. You can also use that as a stop loss tool. This is the German DAX, and you can see here on the daily we're still above this trend line. If I zoom out, there's a trend line there. I've drawn this target area because there still is a bearish divergence on the CCI 150 versus the price, and if it did drop, that'll be the initial target area minimum to get to. You'll notice if I zoom out on that, the stochastic market forecast indicator is still very much overbought. On the hourly, I've got two trend lines here, and it's actually broken through the top one. You can see there where those bottoms and tops are. It's actually broken through the bottom one. That dotted line is a 61% Fibonacci retracement between that range there, and it's actually broken below that and currently hovering around that 61% level. Notice the CCI 150 is still dropping off after that bearish divergence, and if I zoom out, you'll see there the stochastic market forecast was still pretty much overbought and dropped down almost as far as 75%, and making a very slight move to the upside with that little retracement in the last few hours. Next we've got the Japanese Nikkei. So basically on the daily it's broken down below this ascending trend line. The CCI 150 is still declining, and that's a bearish divergence versus the higher highs on the price after hitting that resistance. And you can see there, if I was to draw a target area on that one, I'd bring it back to the previous main low, which would probably be that point there. Oops, wrong. That point there to that high, and the target area would be somewhere, it looks like it's already hit it actually, somewhere in that range there between the 23 and the 38% level. So if I zoom in, as you can see there's that wick of that candle's probably just touched it. That could have been the executional close of that divergence, or it may still continue to drop. You can see the CCI is still dropping and hasn't actually made any new highs. And the ADX is also showing a bearish outlook. If I zoom out on that, it's still pretty much overbought on the stochastic market forecast on the daily. And on the hourly, again zooming out, you can see it's actually broken down from the overbought territory and hit the 75 level of that indicator. And zooming in, you can see there it's actually, we had a bullish divergence there. Bounced up, hit our little target area, and actually it's continued to the downside since our last video and made a bit of a retrace. So I would wait in terms of a trading again. I'd wait for if I was trading the hourly, I'd wait for the hourly to align with the daily chart. Remember, on the day, we've got the monthly is still bullish, the weekly is bearish, and so is the daily. So the daily is still bearish, so that's where it's pretty much safe to take short trades. If I was to zoom out, short trades from that period onwards. So you would have taken short trades during that, when it's red there, when its CCI drops below the moving average band. Take another short trades there. That would have been a nice little trade to take. And wait for this to turn red as well, or when that CCI drops below the moving average band. Last but not least, we've got the NASDAQ. And on the daily chart first, it's actually broken down below this first diagonal ascending trend line. And we've drawn another target area here. There is a bearish divergence on the CCI versus the price, and that's our initial target area on the daily. If I zoom out, you'll notice the stochastic market forecast is still in the overbought territory, so it's still got some ways to go before it starts breaking down. And on the hourly, before I zoom in, you can see the stochastic market forecast is still overbought. Made a few touch points here on the 75 level with those little retraces, and it's bounced up from there, and it's doing the same thing again. So just be careful about going short. We'd like to see, again, preferably the monthly, weekly, and daily trends in alignment before taking those respective trades on the hourly or smaller time frames. Again, we had a bullish divergence here versus lower lows on the price. It bounced, hit our target, and we're expecting it. You can see there the CCI is still trending upwards, actually breaking down slightly now. So that might be primed, ready for a short positioning soon. To support us more, go to the Patreon page for Pete's Investing, where we also do weekly scans of blue chip shares that are trending along on a longer and medium term timeframes. Feel free to support us there, and we'll see you in a future video.